Let's talk about voluntary disclosure agreements. What is a VDA?
Well, in its simplest form, voluntary disclosure agreement is an agreement between an anonymous taxpayer and a state government.
Okay, and what triggers that?
Generally speaking, it's going to be how much penalty and interest and exposure and tax liability you have in that jurisdiction, and the amount of money the accountant can save you from doing a voluntary disclosure. So for an accountant, if they're going to charge you a certain dollar amount to do this, the amount they save you has to be in excess of what they charge you for you to do the voluntary disclosure agreement.
Okay, so tell me a bit more about the process of doing a VDA.
Yeah, the process of a VDA is brutal. And so it goes down to, it can take anywhere between 2 and 12 months. But the first step in the process is an application with the government. And that's usually an anonymous application, although some states don't allow anonymity anymore. But it's an anonymous application where the accountant, on behalf of the taxpayer, asks the government, coming forward, saying that we have a disclosure, we have tax exposure in your jurisdiction, we'd like to proceed under these guidelines, and we'll come forth and pay that liability if you agree to give us a look-back period that's favorable and waive interest and penalties on that voluntary disclosure. So that's step one. And until that is agreed to by the government and the accounting firm, the taxpayer's name is not disclosed. Once that's agreed to and you have it in practice, then the process is the accountant has to provide good faith estimates of the liability, when the date of business was first established, what type of transactions were sold into that. And this actually differs state by state. Each state has different rules and regulations on how they proceed. But, and that's a lot of back and forth communication between the taxpayer, the CPA firm, and the jurisdictional authority. Sometimes the government might ask for an audit of those transactions. Sometimes they're going to ask you for spreadsheet tax returns. Sometimes they're going to ask you for full tax returns. It just depends on each state. But generally speaking, it takes on average between 2 and 4 months, but some can go as long as 12 months depending on how much back and forth is agreed and disagreed upon.
Sure. And I know some firms are waiting to talk to clients about sales tax until they get some kind of notice. Is that too late to do a VDA?
Absolutely, that's actually a really good point. If you've been contacted by a government before you contacted them, that actually disqualifies you from doing a voluntary disclosure. So if a nexus letter or a nexus questionnaire has come from the government to the taxpayer already or any previous time, they are disqualified from being able to use the voluntary disclosure process.
So it's really, there's a big incentive for firms to proactively talk to clients about sales tax.
Timing is critical on that. If you want to save your taxpayer interest and penalty on those, you need to be on the forefront of that, proactive, talk to the government before they talk to you, or you're going to lose that opportunity.